They don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful co-host.
Hello, JD. I'm Melissa.
And we got a pretty good show today, and I think that this is going to resonate with a lot of you, especially rehabbers or new wholesalers. We got Tyrus Gross. He is the owner of getthedealsnow.com. He is a real estate investor, been around the game for over 30 years. He is also an author and has a lot of good information for you guys. So Tyrus, thank you so much for coming on our show today. We're really happy to have you.
Thank you, JD. I really appreciate the effort and the time.
Yeah, absolutely. Well, if you don't mind, I'm sure some of our audience knows who you are and has seen you before, but for those that haven't, can you kind of give us a rundown of how you started, just your brief overview, and then we'll see where the conversation goes from there.
Sure. Basically, I'm currently in Austin, Texas, but I started out in Los Angeles, California in 1989. And the first 6 years were rough years for me. I was listening to one individual and he said, you know what, you need to go get the pre-foreclosure list and go door knocking. So I did that. I went from door to door and speaking with people and I got into some of these houses, spoke with them. Other folks were very, very irritated, to say the least, because they're about to lose their house. So I talked to a number of people, got them to come down, but not down low enough to, that made sense for me. Wasted a lot of time, in a nutshell. Wasted a lot of time on the pre-foreclosures. And then I spoke with another individual and they said, well, you need to get the REO lists, the real estate owned, the bank foreclosure list. And, the house didn't sell at the auction, so it went back to the lender, and you need to buy from the asset manager, the REO manager. And long story short, I left a lot of messages, and I wasted a lot of time, because you don't even know if you're hitting the right person. You don't know if you got the right extension or whatnot. Then another one said, well, you need to get the lease option to purchase method and do that. Long story short, I wasted a lot of time. Almost 6 years. And JD, I'm not a person that gives up easy. Yeah. This was very, very frustrating for me.
Well, and you got to remember too, back in 1989, the internet was not a thing. You didn't go to the bank website and get a list of the REO properties that they have for sale. You didn't have any of that. So you're literally cold calling people and hoping that somebody knows what you're talking about, because most people at the bank don't understand what real estate owned properties are anyway.
Right. And it could be in a different branch. It could be in a different state, So yeah, that was a very frustrating process for me. And again, this was in Los Angeles, and I walked into the Real Estate Investor Club, Los Angeles Real Estate Investor Club, and inside there were probably 300 to 400 people. And I walked inside the door, and right inside the door, there was this big table, and there were a bunch of flyers. And there were actually, some of them were flyers from wholesalers. Mm-hmm. They had pictures, they had the ARV, they had what they're asking. So say, for example, the ARV or what it's worth is $400,000. I could buy it for $300,000 or $280,000. It had the wholesaler's name, contact information, all that. And some of these wholesalers were actually inside the room. So I eventually, after month after month, I went in there and I was speaking with them, and I bought their wholesale deals. So going to that meeting, and more specifically buying from wholesalers, changed everything for me, and I've never looked back since.
Yeah, absolutely. And we like to hear that, in our business, when we're wholesaling, we're looking for qualified buyers. And I think a lot of the listeners to our show, they're beginning level wholesalers. Now you're an established buyer at this point, and you've worked with, hundreds of wholesalers over the course of the last 30 years. Do you have any advice or recommendations to wholesalers on how they can find and keep qualified buyers that are actually going to close on the properties when they say they are? What are you looking for when a wholesaler presents the information to you?
Great question. Great question. I appreciate you asking that. I look for two things, the two things that are most important on a wholesale deal. First of all, well, there's a number of things, but is the ARV, the after repair value, is it backed up by solid sold comps, and are they good comps? So let's say the ARV is 400,000. I would like to see several that are 400,000 or close to it. If you say the ARV is 400,000, but the ARV or the sold comps are more like 390 or 385, that's going to present a problem for me. So solid, honest sold comps are that support that ARV. Mm-hmm. The other thing is the estimate. So if you say the estimate, the rehab estimate is $20,000, but it winds up being more like 30 or 40,000, that eats into my profit, and that creates a problem for me. So those two things, the rehab estimate and the solid ARV, those are very, very important, because what I tell people to do, and I do this myself, if I say I'm going to do something, I'm going to do it. So what I do is I find the wholesalers that are the true wholesalers, and then what I do is I live up to what I say I'm going to do. If I say I'm going to close in 7 days and less, I'm going to close in 7 days and less. And what I do is, if the numbers are good, I'm not going to worry about negotiating with you. Mm-hmm. I'm not going to, let's say you want 280 for the property. I'm not going to say, well, how about 270 or 265? If 280 is still leaves me with a lot of meat on the bone, I'm going to give you 280. And if I say I'm going to close in 7 days or less, I'm closing in 7 days and less. And that's what happens when you start doing this real time with real money. And what happens is these wholesalers make money, and I want them to make money. And then they start coming back to me as one of their first go-to people.
Yeah.
So.
Yeah, absolutely. One of the things and we've tried it both ways, and I kind of pride myself on being able to really pinpoint ARVs, like we were talking about before the show. Melissa's an agent. We are in the retail market every single day, just as much as we are on the investment side. But what I've seen is, no matter what ARV I put in there, and usually I'm super conservative when I'm running my numbers, mm-hmm. and because we also fix and flip and we also buy and hold, I run those numbers as if they were my numbers, for our business. And that's the ARV that I go to. But regardless of what I put the ARV, whether I find the ARV and I drop it $50,000 and put that in, or if I overshoot the ARV by 50,000, it doesn't matter. Either way, the people on our list that we're sending these properties out to, the buyers, mm-hmm. they always come back. Not everybody, but a lot of them always come back. Oh, your ARV is way off. You don't know what you're talking about. Now, these are usually out of state buyers that don't really have a understanding of the area. So in our business, we've started to leave off the ARV and leave off the estimates. I just provide the property address, the description of the repairs, and then we do photos and videos of the entire property and let them come up with their own numbers. Do you recommend that we should put the ARV in and the rehab estimates, or do you think leaving them off is a better?
Well, it all depends. In your case, I would put the ARV in, because you have access to the MLS. You have access to recents. You know what a sold comp is.
Yeah.
We're not going to compare 1,500 to a 2,000 square foot house. You have real good access, given the fact that you have access to the MLS and the recent sold comps. So I would put them in. I also advise people to, when you're in my position, the buyer, I tell people to invest where you live. I'm in Austin. I invest in Austin because I know the market backwards and forwards. Right. I know the sold comps. I've got relationship here. I know when jobs are coming. I know the trends. I can follow the trends. So from my perspective, I like seeing the ARV. From your perspective, in your scenario, given the fact that you have solid sold comps, I would put them in. Yeah. If some out-of-state investor says, "Hey, you're crazy," well, here are the sold comps to back it up. That's what I like some backup documentation, right, if you have to, But
yeah, absolutely. Well, okay. So now, if we could talk a little bit about our fix and flippers and rehabbers. How can they identify a good wholesaler versus a crap wholesaler? What kind of things should they be looking for when they're trying to build relationships with these wholesalers? How do you tell if it's a wannabe wholesaler or if it's somebody legit that's running a business?
As we said earlier, those honest ARVs, make sure your numbers are not inflated. That's pretty important. And then the rehab estimate, if you don't provide the actual dollar amount for the rehab estimate, it's okay. But if you have a pretty good sense of what that rehab is going to cost, I would put it in, and then they can crunch the numbers. The other thing that's very, very important that beginners may not realize and probably don't realize is you have different markets. You've got a seller's market, you got a buyer's market, and you got what I call a flat or normal market. Mm-hmm. So I am in a seller's market because Amazon built this, you got Apple, you got Samsung, you got all these big companies and a lot of smaller companies coming here, setting up shop. Actually, they're already here. They're expanding shop. So they're bringing in a lot of jobs. So until about 2 or 3 months ago, we were in what I would refer to as a hyper seller's market because all these people and very little inventory. Given that the Fed has raised rates 4 times to the tune of about 2.25%, it slowed the market down, but we're still in a seller's market. I know that because I live here, I work here. I know it backwards and forwards. So I tell people, know your market. Are you in a seller's market? Are you in a buyer's market or somewhere in between? And then, so that's step 1. Step 2 is apply the wholesale buying criteria for that market. So in a seller's market, it's more like 80% of ARV. Mm-hmm. In a buyer's market, it's more like 60 to 65% of ARV. In a normal or flat market, more like 70% of ARV. So know your market and then know the wholesale buying criteria for that market.
Yeah, absolutely. We agree with all of that. Our market is starting to approach the flattening of the market. It's what we would call a balanced market. And we're starting to see all of the properties where you could literally just purchase a property, hold it for a month and a half, and then relist it on the MLS and make your profit from the property that way. You wouldn't even have to do the rehab. That's kind of not happening. And we're seeing some of the prices come back down to more in line with what they should be appraising at based off of the sold comps instead of $30,000, $40,000, $100,000 over what the most recent appraisal is. Yes. So we're seeing that, and we adjust our contract prices according, very similar, 70 or 65 to 80%, depending on where we're at. That's great. Okay, so
it's funny. Sorry for interrupting. It's funny you should mention just buy and hold for a few months or whatever. This house that I'm currently sitting in went in. It appreciated $200,000, and I didn't do anything to it. Now this is my, where I live, but that's an outside force. It's not forced appreciation. There's another term for it, but you're just sitting there and the market's going up, right? Yep. So I don't really rely on that.
No.
I'm like you, JD. I'm more conservative when it comes to these numbers because this is not a game. This is a business. I treat it very seriously. I mean, I have fun with it. Don't get me wrong, but these are real numbers, real dollars. So I don't expect it to continue to appreciate, even though I do get multiple full price offers and many times over what I'm asking for. I don't assume that going in.
Absolutely. And that's what's going to keep you safe if there is a market correction, or if you make a mistake on your rehab estimate, or you find that half the house is eaten by termites. Being really secure in those numbers is what's going to help you get through that, or at least mitigate the losses, because there is always a risk of some sort of problem happening that eats into your profits a little bit too much.
foundation problems that you didn't know. That's another 10 or 20 grand. Oh, wait a minute, where'd that come from? Even though I'm looking for it, I didn't, so things happen. So
right. Absolutely. Well, can you tell us a little bit about what your team looks like and are you owner, operator, a sole person, and then you're contracting out, or do you have like an in-house contractor team that's working with you? Do you partner with real estate agents? What does your business look like?
Well, it varies. I have a number of people, contractors that I work with, subcontractors that I work with. I keep them busy. I have some virtual people that I bring on board from time to time, depending on what my needs are. I work with several mortgage brokers. Those are not, in-house, but these are people that I work with on a regular basis. I have a number of wholesalers that I work with. So it's a smaller team, but what I do is I delegate as much as I can. I'm at the strategic level.
Mm-hmm.
I'm thinking, big scheme. And if I can delegate to someone else, I do. So, I don't do the electrical work or the HVAC work or the tile work. I delegate that to other folks because they're good at what they do. And I could do it, but that's going to eat up my time.
Yeah.
So I value time, especially at this stage. So I'm more of a strategic thinker and delegate to other folks.
Okay. Yeah, that makes a lot of sense to me. And that's what we try to do. We're not the best at it yet. I'm a little bit better at it than Melissa is, but we're trying to put the processes and procedures in place that we can give it to the work to our team. That's been really vital in kind of allowing us to think bigger and do bigger. So I'm glad to hear that that's the way that you're operating. Now, if somebody, any of our listeners, because I know you have a couple of things that you offer and you've written your book and stuff, can you talk to us about the training and the stuff that you have to offer and kind of maybe let our audience know what it is that you can provide them and then where they figure that out at?
Sure. So if I may, I know we're kind of short on time, but there is something that I refer to as the success path. And the success path is basically 5 legs or 5 pillars. The first pillar is finding the wholesalers locally and buying their wholesale deals. And I show people how to do that. The second is using private lenders to fund these wholesale deals. The third leg is money partners. And you may or may not need a money partner. Money partner just comes in if you're still short on cash. So for example, the ARV is $400,000. We can buy it for $300,000, but the lender will only lend $280,000. We're short $20,000. So that $20,000, you can bring in the money yourself if you have it. But if you don't have it, you can bring in a money partner. That person allows you to close the deal and you split the deal, split the profit 50-50 on the back end.
Mm-hmm.
The fourth leg of the success path is making strategic repairs based on the neighborhood. We all know there's higher end neighborhoods, there's low end neighborhoods. You don't want to overspend, you don't want to underspend. So we make sure that we focus on strategic repairs to the house based on the market, and we pay real close attention to curb appeal.
Mm-hmm.
And I could go on for an hour on that one, but, but the fifth leg is selling the houses quickly. Obviously, if we already have a buyer's list, that's great. If we don't have a buyer's list, we can use auctions. I've also used mortgage brokers on many occasions because mortgage brokers have access to multiple lenders, and they deal in subprime markets where an individual has rough credit, marginal credit, or low down payment. I've learned so much from mortgage brokers, and they've trained me, and I've turned around and I've trained other people. And I can't tell you how many times people I've approached them and they didn't realize they could buy a house, but they bought a house. So they became customers, and guess what? They referred me to other people, their friends and family. So those 5 legs are the success path, and that's where I point. And I follow that myself.
Right.
I mean, I don't need a money partner anymore, and I use my own cash. But you know what I'm saying. I want people to succeed notice it's from beginning to end, from finding and buying from the wholesaler to selling and closing and getting money wired into your account.
Right. Yeah. No, I think that's great. And a lot of times new investors have a hard time because they don't see or they don't understand every step from A to Z. And that handcuffs a lot of people. They can't take the next step because they don't know what 6 steps down the road. But if you have a plan that is a proven plan that you can put into the works, that's going to help a lot of people overcome that initial fear and the paralysis analysis paralysis stuff, and kind of, give you a guideline or a path to follow. So I really do like that. Now, if our listeners wanted to look that up and find out more information about that, where would we send them?
Well, there's a couple of different things that I would suggest. The Zoom call. If you go to zoomcall.getthedealsnow.com, what I'm offering is a free call, and I'm going to teach everyone on the call. I'm going to show you exactly how to find wholesalers in your own city. So 8 different ways to find wholesalers in your own city. And everybody that's on the call, I'm also going to give you a wholesaler's contact information, cell number, email address, so that not only are you going to learn how to find them, I'm also going to get you, off and running. Here's a wholesaler in your city, and you can use that. The second thing is the Facebook group. It's a private Facebook group, facebook.com/groups/getthedealsnow. And when you sign up there, you and I can have a conversation. It's not just a one-way street. You can reach out to me. So those 2 things is what I would recommend.
Awesome.
Fantastic.
Yeah, that's great. I'll be headed over there to the Facebook group as soon as we get off the call today. Well, Tyrus, we really appreciate you coming on the show and sharing your nuggets of wisdom. I think that getting our listeners that are wholesalers to really focus on dialing in those numbers and providing true and correct information is going to help them out a lot. And I think now, obviously, I want everybody that's listening to get onto our buyers list and start seeing some of the deals that we're pushing out. But I think building those relationships with wholesalers who are doing this every day, not just somebody who's daisy chaining a deal 6 times from the owner, is really important. So I'm glad you mentioned that also.
It's all about relationships.
Yeah,
all about relationships.
Awesome. Well, Tyrus, thank you so much for coming on the show today, and we can't wait to talk to you again.
Thank you, JD. Melissa, appreciate it.
Bye. Thank you.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.